Welcome back to CryptoReactor YouTube channel. Let's understand. Ethereum is showing a clear pulse right now, and if you're watching the charts like I am, you'll see why traders are suddenly all ears. At the time this analysis was captured, ETH is trading at about $4,501 after a fast and clean run from the low 4,000 area into the mid 4,500s. That sharp move up followed a period of digestion and lower volatility, and now price is bumping up against the most recent highs. The key question for today's analysis is simple: is this a real change of market structure into a higher gear, or a short-lived relief rally that will be sold into? In the next several minutes I'll walk through the technical picture, identify the critical support and resistance zones you need to know, explain what the volume and momentum are telling us, tie in the most relevant on-chain and macro factors that could influence price, lay out plausible bullish and bearish scenarios, and finish with practical risk management and trading frameworks you can use depending on what happens next. This is meant to be an objective read of the chart and the context around Ethereum, not a prediction you must follow blindly, so use it to form a plan, not as the plan itself. First, let's frame the immediate price context. ETH is roughly $4,500 and has printed a recent high wick near $4,560 on the current timeframe. That $4,564,600 area now represents the nearest resistance cluster. Breaking and closing above that zone with conviction would be the clearest evidence that buyers truly stepped in and that the breakout has followed through. Below price, the immediate short-term support lies around $4,400 where the recent consolidation began to lift off. Under that, there is a secondary support/pivot between $4,200 and $4,100 where price previously consolidated before the recent surge. Deeper and more structurally important is the $4,000 round number, psychologically and technically important, with a thicker support band between roughly $3,900 and $3,800 that acted as the base during the larger sell-off earlier on the left side of the chart. Those are the levels that, literally, tell the story. Resistance $4,564,600, pivot/support $4,400, key lower supports $4,200 and $4,000,3,800. If you memorize those zones, you can quickly orient yourself when price action evolves. Now let's dig into price structure and the recent move in more detail. The chart shows a decisive waterfall drop earlier in the timeframe followed by an extended period of lower highs and lower lows. That's the sell-off leg. But then we saw a base form around the $3,900,4,000 area. From that base, buyers stepped in and lifted price in a series of strong green candles, punctuated by higher volume on breakout legs. That transition from distribution/decline to higher lows and then to a sustained bullish leg is representative of a classic accumulation to breakout sequence. Momentum accelerated as each impulse leg formed, and the most recent run is the strongest move upward in terms of candlestick size and velocity. That's important because velocity and volume together often indicate whether an advance is fueled by genuine demand or just short covering. In this case, the volume profile during the push north shows notable buying interest, suggesting more than just a squeeze. Real bids were picked up as ETH climbed. Momentum indicators complement the price action story. Shorter-term oscillators, on the same chart, likely show overbought readings after the rapid climb, which is expected. Breakouts tend to push RSI and similar momentum tools into extended territory. That doesn't automatically kill the move, rather, it signals that a consolidation or a mild pullback to the nearest support to refresh momentum is possible and even healthy. MACD-style metrics probably shifted from bearish toward neutral or slightly bullish during the run, indicating a momentum change in the short to medium term. The key nuance here is the balance. Momentum is clearly positive since the breakout, but reproduction of demand at retest levels will confirm whether buyers remain committed. If the market refuses to give up more than a small retrace and keeps forming higher lows near $4,400 or $4,200, that's a structural positive. If, instead, price collapses back through $4,200 into the low 3,900s, the setup becomes fragile again and a larger corrective leg becomes likely. Volume is another critical piece of the puzzle. Notice that the more aggressive green candles to the upside are accompanied by comparatively higher volume bars than the preceding consolidation candles. This is the kind of volume-price relationship that traders look for: price advances with rising volume, and narrow consolidation with lower volume, which preserves the move's integrity. Conversely, if we see a strong move up on thin volume, that's a red flag. It often means a low-quality rally. Here, however, the buying volume during the breakout leg was real, which supports the bullish case. Still, pay attention to the next few bars. If price tags the $4,560 resistance with declining volume and a long upper wick, or if the subsequent candles show heavy selling volume, that would increase the odds of a rejection and a pullback toward the $4,400 to $4,200 support band. Let's enumerate the bullish scenario in clear terms. The bullish thesis says, buyers have absorbed the selling pressure at the $3,900,4,000 base, formed higher lows, and then produced a breakout leg which gained volume and momentum. If ETH now closes above $4,564,600 on strong volume, that would confirm the breakout and change the near-term market structure in favor of buyers. In that case, the first realistic target is the psychological and technical zone near $4,800,5000, where previous supply clusters and round number profit-taking could appear. Beyond that, if momentum sustains, the path toward $5,205,500 opens as traders chase the move. Institutional flow or positive macro headlines could accelerate this trajectory. The bullish case is reinforced when pullbacks are shallow and occur on lighter volume, which suggests that sellers are not committed and buyers use dips to add. In short, breakout above $4,560 with follow-through and volume equals a high probability that we extend gains toward $4,800, $5,500. Now let's outline the bearish or risk-off scenario. The bearish case starts with a rejection at the $4,564,600 resistance and loss of the immediate pivot at $4,400. If ETH prints a strong bearish candle that closes below $4,400 on heavy volume, the probability of a deeper retracement increases. The next meaningful support cluster sits around $4,200, $4,100, and if that breaks, the logical targets are $4,000 and then $3,900, $3,800, where the prior base formed. Finally, frame your trading decisions within a longer-term view. If you are a long-term investor, the day-to-day swings matter less than fundamentals like network adoption, staking trends, and regulatory clarity. For swing traders, the near-term levels and confirmation are paramount. Regardless of horizon, always contextualize trades within the broader market environment and your personal capital plan. Ethereum's recent move into the mid-4,500s is encouraging for bulls, but it must either sustain through the $4,560 resistance or prove its strength on retests of $4,400 and $4,200. Use those price levels as your roadmap, maintain strict risk rules, and let price and volume decide whether this is the start of a meaningful leg higher or just a pause before the next leg lower. Remember, nothing in this script is financial advice. Trade with a plan, manage risk, and stay patient. If you're watching this live, jot down $4,564,600 as the immediate resistance watch, $4,400 as your tactical pivot, and $4,200,4,000 as your structural support range. Those three zones, resistance, pivot, and structural support, will tell you whether bulls or bears are currently in control. Keep an eye on volume and on-chain flows, monitor macro headlines, and be ready to adapt as price writes the next chapter. If you want to follow up, I can pull live on-chain metrics and higher timeframe overlays to refine targets further, but for now use these levels as your working map for how to approach Ethereum in the current market environment. Subscribe Crypto Reactor if you really enjoy this video.